To kick things off on the daily chart, yesterday's candle closed pretty bearish, and you've left behind relatively equal lows, which means that purely based off of the daily chart, the bias should be towards the downside. Although the moment I get into the lower timeframes, you'll start to see that this isn't really pointing towards the downside at the moment. So what I mean by that, previous daily low right here is eventually going to get swept, I think, just purely because you have left behind a relatively equal low here. Makes no sense for the market to start pumping from this point onwards while leaving behind essentially these two relatively equal lows. For those of you who are new to liquidity concepts, essentially the market's always trying to target something. We picture the market as kind of like a fish. And the fish is always hungry and it's always looking for food. Sometimes the food can be on the bottom of the ocean, sometimes the food can be closer to the surface of the ocean. But you as the market, as the fish, you're always looking for food. Food being people who have their stop losses set. And relatively equal lows in this case are some of the most abundant food sources out there. So it's very rare that you'll see the markets leave behind relatively equal lows without sweeping them first, but then going to the other direction.